Hello, welcome to IGTV. I'm Angeline Ong, and very shortly we'll be joined by senior strategist Daily FX Nick Cooley to talk about all the things that are going to move markets in the coming week. First, let's start off with Monday, when Germany is going to be a big theme, especially after those recent numbers showing that the economic pain in Germany and the euro area is deepening, and this leaves the ECB in a bit of a pickle. We've got the CBI distributive trades as well. And then on Tuesday, we also have quite a busy time in terms of consumer-related data. Canada is out with its consumer price index, along with the United States also out with consumer confidence figures and those crude oil inventories, API ones, I might add. And new home sales as well will give us a better idea of how the economy is faring over there. Midweek, look out for confidence numbers, further confidence numbers from Germany, this time from the consumer. We've also got industrial figures out of China and more consumer confidence figures out of France as well, plus US wholesale inventories along with crude oil stocks, this time from the EIA. In the latter half of the week, the consumer theme continues on with Japan and Australia out with retail sales figures. Germany continues that trend with its CPI inflation, of course, a great talking point in Europe at the moment, especially within financial circles and what this might mean for interest rates going forward. And in the US, we've got Q1 GDP growth rate numbers along with pending home sales and initial jobless claims as well. And ending the week, it's also just as busy. Retail sales numbers from Germany and the final Q1 GDP numbers out of the UK and core PCE figures, the price index rather, from the US, along with oil rig numbers as well. Let's cross over to Nick now to discuss those slightly dour figures out of Europe in terms of economic data. We are also seeing that France's dominant services sector unexpectedly shrank. How does this all play into Euro GBP and inflation in the Euro area?
Yeah, hi, Angeline. As you said, today's numbers, the PMI numbers, both from France and Germany and the Euro area, very weak. They paint a sort of quite a bleak picture going forward for the Euro area. And as you said, next week we have sort of consumer sentiment. We have some more numbers from Germany, consumer sentiment, and then we have inflation. Now, all of these releases are potential market movers. But what actually you're seeing happening is that the euro is really now starting to come under pressure, and we're coming down to sort of levels that we haven't seen in sort of 6, 7, 8 months, and there's a bit of a gap below on the chart. So if we do continue to see euro area weakness, and if we just look at the euro sterling chart here, we can see from sort of very early February that we have these very well defined lower highs coming all the way through, all the way down here. We kind of got down to this level here around the 85.50 level, where we've had some sort of prior support, but that's been tested, it's been broken, but it hasn't been broken convincingly yet. I mean, it has, as I said, we've been probed and it's bounced, probed and it's bounced. But the fear here is that if we do break this line here, which is at 85.19, then if we just roll the chart a touch here, what you can see is there's quite a bit of a gap. There's no sort of price action for some time, all the way down to this 83.40 level. So really, I think what we have to watch out for next week is if we do get sort of continued weakening sentiment, if we do get inflation remaining sticky and remaining high, as it is globally, then what we could see is that the euro coming under pressure, testing that level of support and pressing lower.
So the euro looking weak there. The dollar, however, looking quite strong there, given all those hawkish comments coming from global central banks, including the Fed as well. Nick, we've got quite a few data points out of the US, the core PCE, along with some other big numbers from the US labor market. Yep. How should investors trade this?
Again, with the dollar, you're sort of kind of seeing a wave pattern, but it's again dominated by sort of lower highs coming all the way through. I think with the dollar, the dollar recovery here that you've seen in the last 2 days, especially today, this is really on the back. This is the dollar index we're looking at. It's really on the back of the weakness in the euro. So the weakness in the euro, which takes up sort of about 58% of the dollar basket, in itself then sort of boosts the value of the dollar. So this is really this reaction higher here. A lot of this is due to euro weakness. As you said, core PCE out next week. This is the Fed's preferred, a favoured measure of inflation. Inflation in the States has been coming down, but it seems to have sort of been stuck at the moment at a rather sort of this level that it's finding difficult to sort of push lower. The Fed have already sort of indicated that they would, if needed, hike interest rates again. I think the expectation in the July meeting is for another hike. But with the dollar, I think the upside is fairly limited. And as I said, I think most of the upside for the dollar basket anyhow, or the dollar index, will be driven by weakness in the euro. If we just sort of quickly look at the chart here, you can see we've got this 50-day moving average coming around here, 103.27, and then we got this little cluster between here, 104.30 and 104.65, 104.66, and I think it's going to be very difficult for the dollar index anyhow to break above this level anyhow.
Lovely wave chart there, Nick. Taking a look at the dollar for us, money markets now seeing a 74% chance that the Fed will raise interest rates by 25 basis points at its next meeting, as Nick mentioned, after leaving it unchanged last week. Now, on the corporate front, it's just as busy. We start off the week with earnings from Carnival and Associated British Foods as well, out with trading numbers there. Then on Tuesday, we have Walgreens Boots Alliance out with numbers, along with Telecom Plus and Wise out with full-year earnings. Wednesday, look out for chips, because we have numbers from Micron Technology and also General Mills. Its fourth quarter earnings will give us a broad view of how consumers are feeling about their groceries and their grocery bills, more importantly, over in the US, and how their consumption behavior is changing. Thursday, Nike is the big one to look out for, and H&M as well. Moonpig also releases full-year earnings. And last but not least, on Friday, we end with numbers from Constellation Brands and Sodexo.